Hey there, investing iguanas. It's your favorite financial analyst reptile, Iggy, back with another exciting video that's sure to make your wallet sit up and take notice. Today, I've got some news so juicy, it might just make your bank account grow scales. Picture this: StarHub, one of Singapore's telco titans, is gearing up for a dividend bonanza that could have you swimming in cash faster than you can say cold-blooded returns. That's right, by 2024, you could be looking at a mouth-watering 6.7% dividend yield. But how, you ask? Well, buckle up, because in this video, we're going to dive deep into the nitty-gritty of StarHub's DARE Plus transformation program. We'll explore how this bold initiative could be the key to unlocking a treasure trove of profits and dividends that will make your investment portfolio shine brighter than a freshly polished iguana scale. Trust me, you won't want to miss a single second of this video, because the insights I'm about to share could be the difference between a mediocre investment and a sizzling hot success story. StarHub, a renowned name in the telecommunications industry, has been creating quite a stir with its innovative DARE Plus business transformation program. This program is not just another corporate initiative, it's a strategic move designed to fuel sustainable revenue growth and potentially enhance dividends for shareholders. The primary objective of DARE Plus is to transform the business landscape and set new benchmarks in the industry. It's about embracing change, daring to dream big, and taking calculated risks to achieve long-term success. The program is a testament to StarHub's commitment to its vision and its willingness to invest heavily in its future. As part of this ambitious program, StarHub has already made a significant investment. By the end of 2023, the company had invested an impressive $191 million. This is no small feat considering the total planned investment for the program is $270 million. This means that more than 70% of the total planned investment has already been allocated, demonstrating StarHub's dedication to this transformative journey. This level of investment truly embodies the phrase, putting your money where your mouth is. It shows that StarHub is not just talking about transformation, it's actively investing in it. This bold move is expected to yield positive results, paving the way for a brighter and more prosperous future for the company and its stakeholders. It's a clear signal that StarHub is committed to driving growth and delivering value to its shareholders. Here's where things get really interesting. Industry analysts are forecasting a significant shift for StarHub in the near future. They predict that the second half of 2024 will mark a pivotal moment for the company. This is when StarHub is expected to reach a turning point that could potentially reshape its business operations and financial outlook. The analysts anticipate that StarHub will significantly reduce its business-as-usual capital expenditure during this period. Capital expenditure, often referred to as CapEx, is the money the company spends to buy, maintain, or improve its fixed assets, such as buildings, vehicles, equipment, or technology. In StarHub's case, this would mean a substantial decrease in the funds allocated for maintaining its existing infrastructure and systems. In addition to this, the company is also expected to cut operating costs. Operating costs are the expenses associated with the day-to-day operations of a business. They include things like salaries, utilities, office supplies, and other necessary expenses. A reduction in these costs could result in significant savings for the company, which could be redirected towards other strategic initiatives or returned to shareholders in the form of increased dividends. The key driver behind these anticipated changes is StarHub's transition from legacy systems to new, state-of-the-art cloud platforms. Legacy systems are older methods, technology, computer systems, or applications that are still in use. While these systems may still function adequately, they often fall short when it comes to efficiency, flexibility, and cost-effectiveness. On the other hand, cloud platforms represent the cutting edge of technology. They offer a range of benefits, including scalability, flexibility, and cost-effectiveness. By transitioning to these platforms, StarHub can streamline its operations, improve its service offerings, and position itself for future growth. For investors like us, this is indeed promising news. When analysts estimate a net profit compound annual growth rate, CAGR, of 14 to 15% from 2023 to 2026 for StarHub, it signifies that the company's profits are expected to increase at a steady rate year over year during this period. To put it in simpler terms, imagine a money tree that you water and care for regularly. Just as this tree would grow steadily over time, so too are StarHub's profits expected to grow. This growth is not just a one-time increase, but a consistent rise that compounds each year. This steady growth in profits could potentially lead to an increase in the value of the company's stock, making it an attractive investment. It could also lead to higher dividends for shareholders if the company decides to distribute a portion of these profits back to its investors. Now, let's get into the topic of dividends, which is a key aspect of investing in a company like StarHub. Dividends are essentially a portion of a company's earnings that are distributed to its shareholders. They are a way for companies to share their success with those who have invested in them. StarHub has made a commitment to its shareholders that it will pay out at least 6 cents per share or 80% of its underlying net profit, whichever is higher. This is a significant promise as it shows the company's dedication to returning value to its shareholders. It's a clear indication of StarHub's confidence in its profitability and its commitment to sharing this success with its investors. But the good news doesn't stop there. Analysts have made an even more enticing prediction. They estimate that StarHub could potentially pay out a dividend of around 7.9 cents per share. This is higher than the minimum payout promised by the company, making it an even more attractive prospect for investors. This estimated dividend translates to a yield of about 6.7%. Dividend yield is a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. In simpler terms, if you were to invest in StarHub, you could potentially earn a return of 6.7% on your investment just from dividends alone. This is akin to planting a money tree that yields a steady stream of income. In addition to the promising financial outlook, StarHub's operational recovery is also making steady progress, particularly in the area of data roaming. Data roaming is a crucial service for many customers, especially those who travel frequently. It allows users to continue using their mobile services when they are outside of their home network's coverage area. While the global pandemic has significantly impacted this aspect of StarHub's business, the company is making strides in its recovery efforts. Although data roaming levels have not yet returned to pre-pandemic levels, the trajectory is positive. This is an encouraging sign, indicating that as global travel restrictions ease and people start traveling more frequently again, StarHub's data roaming revenues are likely to see further improvement. On another note, StarHub has also demonstrated its confidence in its future prospects through its commitment to a $50 million share buyback program. A share buyback, or repurchase, is a decision by a company to buy back its own shares from the marketplace. This move is often interpreted as the company's belief in its own undervaluation. In other words, StarHub is essentially saying, "We believe our shares are worth more than their current market price, and we're willing to invest in ourselves." This is a strong vote of confidence in the company's future and can be a positive signal to investors. It shows that StarHub not only believes in its current strategies and operations, but also in its future growth potential. It's as if StarHub is telling its investors and the market at large, "Hey, we believe in ourselves so much that we're buying back our own shares." In essence, StarHub's ongoing recovery in data roaming and its commitment to a substantial share buyback program underscore the company's positive outlook. These developments could potentially enhance shareholder value and make StarHub an even more attractive investment proposition. Finally, let's discuss the broader landscape of Singapore's telecommunications industry. Analysts are of the opinion that the industry is ripe for market consolidation. Market consolidation typically occurs when there are a large number of small companies in an industry and the industry starts to mature. This maturation often leads to mergers and acquisitions, as companies seek to gain a competitive edge, increase market share, and achieve economies of scale. In the context of StarHub, this potential market consolidation could open up new avenues for growth and expansion. It could provide opportunities for StarHub to acquire smaller players, enter new market segments, or even form strategic partnerships. This could further strengthen StarHub's market position and enhance its ability to deliver value to its shareholders. So, there you have it, folks. Based on the current trends and future projections, StarHub appears to be on a promising path. The company is expected to see expanding margins and earnings growth, which are key indicators of a company's financial health and profitability. Moreover, starting from the second half of 2024, StarHub is also expected to offer potentially higher dividends. This could result in increased returns for shareholders, making StarHub an even more attractive investment proposition. However, as always, it's important to remember that investing involves risks. While StarHub's prospects look promising, the future is inherently uncertain. Therefore, it's crucial to do your own research and consider your personal financial goals before making any investment decisions. Consider consulting with a financial advisor or doing thorough due diligence to understand the potential risks and rewards associated with investing in StarHub or any other company. Remember, the best investment decisions are those that align with your financial goals and risk tolerance. Happy investing! Well, there you have it, folks. StarHub's DARE Plus program is set to shake things up in the telco world, and if all goes according to plan, investors like you and me could be looking at a tasty 6.7% dividend yield by 2024. Of course, always remember to do your own research and consider your personal financial goals before making any investment decisions. If you found this video helpful, give it a like and don't forget to subscribe to the Investing Iguana channel for more insights that could help you navigate the wild world of finance. Until next time, keep investing wisely, and may your portfolios be as green as my scaly skin.